Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. We're taking a look at the aftermath of final GDP, unemployment claims, and core durable goods and durable goods that came out at 8:30 this morning. And we're going to take a look. Now notice, we have all these numbers here, but let's be straight up. Are we going to really deduce any major trade or trend from any one of these numbers? Probably not, right? For example, does the previous final GDP at 1.3 really trigger that much optimism at 1.4? The only way to know is to go back and look at the charts, right? Is a flat unemployment claim a big market mover? Likely not. The revision that was posted, I believe, is slightly higher, I think by 1,000. And then durable goods. What again does the sum total of all this mean? And so rather than looking at the calendar and rather than sort of parsing through all those numbers, we just go right over here. And I'm going to open up this 5-minute chart here and just show you. So take a look at the 8:30 candle right here. A lot of volatility, right? We expect that. There's 3 different pieces of data that are hitting the market all at once, and it's just going to create a big volatile candle. But then as the dust settles, give it about, actually, let's dial it down to a 1-minute chart. Let's do this. Let's take a look at that 8:30 candle. Now we can see that. There's your 8:30. There's your 8:31. So my general guideline is give it 1 minute. Give it that 1 minute to freak out. Don't use that first 60 seconds. And then after that, you start to see if there is follow through. That will become a whole lot clearer. So when you look at that 1-minute chart, let the 8:30 1-minute candle go by, give it 60 seconds, and then it starts to reveal, oh, this is really the way in which all that data at the same time is being responded to. The one thing that's probably most interesting about the reaction at 8:30 is just how much the Dow doesn't at all seem to be participating with the strength that we're seeing in the Russell, the S&P that we just looked at, and the NAS. It's not participating at all, really, with that move higher. In fact, NASDAQ 5-minute, Russell 5-minute, S&P 5-minute all have green candles, while the Dow is still flip-flopping between neutral yellow and bearish red. So we're not seeing a lot of clarity there. And it's really important to remember not everything's going to benefit in the same way, because then we start to think about what's going on underneath the hood, what's going on in terms of individual stock holdings, what's going on in terms of the sectors that are heavily weighted within those indices, because they're not the same and they're not necessarily the same weighting. So that's where the two roads can diverge. So anyway, here we are with some more NASDAQ strength, and I'll look to see whether or not, actually, the one sector that seems to be getting a lot of attention as of late is the XLY, consumer discretionary. 2 laggards within this group have been Amazon and Tesla, meaning when I look at generally what Google's been doing, when I look at generally what Apple, Microsoft, we look at what Meta's been doing, they've been generally a little bit stronger, but Amazon's been very choppy. We could say Tesla's been very choppy too, but they're definitely playing catch up as we are now the day before the last trading day of the quarter. So when XLY is moving higher, it's usually going to be one of 3 things. It's going to be Amazon, Tesla, or Home Depot, but mostly Amazon. Next weighted is Tesla. And if they start moving higher out of the choppy range that they've been in, then that's going to carry that consumer discretionary higher. And then, of course, thinking about the weighting within the NASDAQ, those are 2 of the higher weighted stocks. So again, when we start thinking alignment, we start thinking index sector stock, when we understand the importance of weighting and that all 100 stocks in the NASDAQ are nowhere near as important as each other, that it's maybe 10 stocks max that will dictate primarily where the NASDAQ goes, where it's mainly about 10 stocks in the S&P as well. These are big groups of stocks, 100 and 500 stocks, and yet they really don't all equally matter. So that's where, if we look at where the high concentration weighted is, we know what's going to happen from there. And, I was talking about this in the Sector Secrets Mastery and also in the Simpler Central room yesterday, which is when you hear anyone start talking about market breadth, just plug your ears, mute them, run away, because high concentration weighting eliminates any kind of need for market breadth. It's nice when the rising tide is lifting all stocks, but it's not in any way necessary in the modern markets of high concentration weighting. So don't let someone out there say, well, the participation, the market breadth is weak, this rally can't be sustained. That's not true. So don't at this moment think it's time to be bearish, right? I really want to ask those folks who've been just touting sell in May and go away, how that's been working out for them. Please, just because something gets repeated again and again doesn't make it so. Take a look at what we've done over the last 2 months as we're ending the quarter. I hope we can just put to bed the ridiculousness and undata supported statement that is. Here we are going into likely September, November, December, or November, December rate cuts. Yes, far later and far fewer. But remember, as long as they're on the table, it is something that we'll continue to buy the dip into. And here's the thing. Let's say come September, and this is not going to happen, but let's say Jerome says, we're not going to cut rates. He says that blatantly. I know, parallel universe, but it's not, but he never would do that. But let's say he did. Let's imagine. At that point, the market's going to pull back really hard. But that doesn't make the rally up until that point any less real. All right. So remember, we trade expectations. We react to reality. And so if we keep that in mind, we can just trade what is, not what we think is going to happen, not predict, what was the prediction? Someone told me, and I was looking at my Twitter feed when I said, hey, the S&P is going to go up higher. And if there is a pullback, I'm not expecting any more than this or that. And I was getting numbers of people telling me 5,100, thinking, are you kidding me? Why? And then someone gave me a dissertation once about geopolitical strife. Well, okay, but if that's not the narrative at play, please, let's just follow the trend. And I say that because, I talk to people or I get emails from time to time of folks saying, I've missed the rally this year. And you know what? Yeah, so far, it's true. However, as long as we know, hey, you know what, Rob, today is day one, and I'm going to trade what I see, not what I think. And this is what I will do going forward. Great, because the markets aren't going anywhere and trends aren't necessarily never going to erupt again. We just have to, again, just make sure we're aligned to the thing that is most aligned to account growth, and trade what you see, not what you think is going to get you there. All right. So every now and then I get those comments or questions via email, and it truly just breaks my heart because, I've heard, other than April, by the way, if you wonder, okay, Rog, I get it, but what about April? Couldn't that happen again? Absolutely. In fact, if there is a pullback, it would be something like April. But let's talk about what happened in April. What happened in April was about 2 or 3 Fed speakers. The one that's coming to mind is Bowman. And rather than sticking with what Fed fund futures have been saying since last year, Q3, Q4, rather than sticking with what Powell's been saying, cautiously dovish, right? 3 Fed speakers, and probably her most particularly, came out and said, we expect hikes. And the market freaked out. You had this rogue Fed member who's just talking their own opinion, not speaking on behalf of the Federal Reserve consensus. By the way, the job of the chair is to create a consensus, right? The job of the chair is to say, look, we all might have differing opinions, but this is the data that we use. These are the models that we use in order to have really positive, I shouldn't say positive, but really congruent Fed monetary policy. We have to be in agreement. So that's his job, right? So when 1 or 2 Fed speakers start talking their own opinion, that's what happened in April. So rather than thinking about rate cuts for about a month, we thought, what if we get no rate cuts? And even worse, we get a rate hike. And there you have April. Now, by the way, not so coincidentally, Powell came out later in a press conference after one of the meetings and said, rate hikes aren't on the table. In other words, shut up, Bowman. And that's where we started going up again. So please know the only macro that really matters is the Federal Reserve. The only macro that matters, the only data interpretation that matters is theirs, right? Not someone on television, not even mine. I don't ever want to talk, this is what I think GDP was. Who cares what I think? The market doesn't, right? I know it's a tough thing to go, wait, the market doesn't care what I think? not even a little bit. But if we can look at the way it's responding, then we'll see, okay, this is what, for example, with GDP this morning, this is what is ultimately happening. But again, notice the Dow isn't in any way participating. And that kind of brings us up to where we are today, which is in the middle of summer. I'm getting the summer light coming through the office here. In the middle of summer, in the midst of very strong S&P and NASDAQ, we don't have participation from financials. We really don't have a lot of participation from healthcare. This is still largely a tech narrative, and tech would be tech, semiconductors, communications, and then consumer discretionary. This is still a narrative of all-time highs, still being driven by primarily three, if not arguably four sectors. So again, that's what high concentration weighting can do. The Dow's not participating in the same way because it doesn't have the same kind of weighting, right? So if we think about the weighting, we can see why it's kind of lagging behind. All right, so as always, if you have any questions, feel free to type them in. Again, bear with me for just one moment. Just give me one moment here. All right, thanks for that, gang. All right, so back to our conversation. I just had to grab some water. Parched. All right, so let's get to some questions. As always, if you have any, feel free to type them in. Ben says, not that excited about today's numbers. I decided to hit that like button. I appreciate that, Ben. All right. So yeah, I mean, look, is it depends on whether or not we're bullish, which index we're most bullish in. Now, all my cards on the table. I have a long position in QQQ, but I also had a long position in DIA. And I had to cut the DIA loose because the narrative that I was looking at just never followed through. So rather than waiting for max debit, rather than waiting for, adding and whatever else, I said, look, I'm wrong right now. Let me take a small loss. I'll take the loss when I can, not when I have to. And that allows a tiny loss, like DIA, which was a loss for me, to be for sure outpowered by a really nice QQQ long position. So I think what happens to a lot of traders is if we find a narrative, we get very committed to it, right? And if we can, rather than, what's the old saying? I think Druckenmiller kind of popularized this, have strong opinions that you hold weakly. And that's really the goal. I had a strong opinion about the Dow, hence I got in, but I held it weakly. So once I held it weakly, meaning weak, WEAK. I held it weakly because when I realized that Dow's just not participating, financials really aren't giving me what I need to follow through. In fact, they're moving lower. I got to get out of the trade. So I keep a small loss there. And then QQQs are well on their way to a 2x trade. And that's where the account growth will come. It's not by just not wanting to admit to a loss in one trade while it offsets the win. I see some traders saying, Rog, I have big winners. And then when we crack open the account statements, we said, yeah, but they're being offset by big losers. Or Rog, I win a lot, but then, 20-30% wins, which is nice, right? But then I have a 90% or max debit loss, and it just undoes some of the small gains. So think about that when you're considering capital allocation. Think about that when you're thinking about risk to the account. And think about that when you're going to vary from fixed bet sizing. And the reason I will always say fixed bet sizing is what you want to do is because it's the only way to have fixed risk to your account. And it's the only way that you acknowledge one very simple fact. We never know what trade is going to be the trade, right? If someone would have told me my Dow was going to fail, but T was going to be one of my winners, nice winners in my account, I wouldn't have believed him. I think that Dow is going to move higher and there's good support. I have an edge. Not true. Don't presume that we're going to know which one of our 3, 4, 5 trades is going to be the one, right? Because anytime you have disproportionate, not fixed risk, what you're really communicating to yourself in the market is, I think this one's the winner. as if any one of us know. So keep that in mind when we're thinking about the way we allocate our funds to a trade. All right. Let's see. Any questions? Is the coffee not kicked in this morning? I know mine hasn't. I put, who here's a golf fan? I grabbed some of that stuff from Lefty. He has some powder that he throws in his coffee. It's really cinnamony, I will say. It's kind of cinnamony, but it's pretty good. Yeah, so I think it's called the good stuff. So yeah, I threw a little bit of that in my espresso this morning with a bunch of milk. Not bad, but really cinnamony. If you like that, go for it. Yeah, but maybe a little bit too much cinnamon. All right. So we're waiting for the coffee to kick in. And let's see. Yeah, so we initially moved higher, but it's kind of now it's take a look at ES now or NQ now. So initially moving higher, and now it's wait and see. Now, gang, I will say this too. We have a tricky time of year coming up. And I know there's oftentimes a lot of interest in a current event that's pretty darn important, but not to trading necessarily. And that is we have elections coming up, and I believe we have a debate tonight at 9 p.m. Now, remember, this isn't about, and I have a strict zero tolerance for politics in my room. This is not about politics. This is about seasonality where it tends to be bullish going into an election cycle. I don't know. That's just what the seasonals pan out. And you can look back over the last dozen election cycles and see this. So I'm going to use that as something bullish. I'm also going to mostly continue to be bullish because of the expectations of rate cuts, right? So keep those in mind. All right, how do I feel about NVIDIA? Well, I hope I don't feel anything about it, but let's see what we think, all right? Based on what we see. All right, so NVIDIA, I want to focus on NVIDIA. Now, after the split, the daily price movement range have to calibrate to obviously a much lower price. So I only have a small amount of volatility history for the DPMRs. They look a little wonky. For that reason, I'll typically pull up SMH because NVIDIA is a quarter of this particular ETF. And also, I would say when it comes to NVIDIA, Christina, there's a lot to like in semiconductors. It's not just an NVIDIA story. Most of the names in the top 11 of that sector are really bullish. And as long as that's the case, as long as we have most of those sectors really quite bullish, then I actually like the SMH as a whole as a way to take the, as I like to call it, the tide. And that way I know I'm playing a lot of the boats within it. So SMH would be my focus because this allows me to take advantage of the strength in AVGO, Taiwan Semi, Micron. I mean, it's hard to not like most of what's in semiconductors right now, with the exception of TXN, Qualcomm, and ADI. Even ASML I might be a little hesitant with, but it's still mostly bullish. So take a look at the overall trend. Qualcomm's printing red candles, so I'm going to leave that alone. But take a look at all the strength here. They look great. So I would focus on SMH in that regard. All right. And by the way, yeah, I want to buy the dip. Maybe not this week, though. Maybe not this week. I'm still somewhat aware that we could see some sector rotation, a little profit taking in semiconductors and tech. And I would rather focus on swing buys either Friday, maybe afternoon, or into next week, into the first trading week of July. All right, next up is Amazon. All right, so we had a question on Amazon, I think on Monday, and I think it was Monday. Someone asked me about Amazon. And on the 24th, yeah, as we were starting our Monday session, I got questions about, well, Friday we moved higher on Amazon, and I cautioned everybody on Monday, said, please don't buy Amazon today. Wait for that pullback, right? Don't buy it into the surge higher. Wait for that pullback. And you can see whether that was the 24th or whether that was the 26th. That was what we want to focus on. So today with Amazon, I expect it to be maybe a little toppy. I don't want to buy up here. Even if you want a very mild pullback, look for at least a slight retracement of yesterday's range, right? So yeah, great breakout It's starting to show a lot of signs of life. We're getting more consistent green candles, but my approach is not to buy at the highs. All right, not to buy at the highs. Wait for a slight pullback. You know, in the past 4 trading sessions, Friday, Monday, Tuesday, Wednesday, we'll get today's here. We've had plenty of pullbacks. If you can be patient and wait for it and not FOMO, you're in a good spot. The hourly is trying to turn into, I believe, an uptrend. Yeah, so the hourly pullback would be fine if you're looking for say a mean reversion or the daily price movement range on the hourly. Jody, that would be valid as well. Tina, you're having Cinnabon coffee? I guess, yeah, I'll just consider this Cinnabon coffee. All right. I love it. Okay. Awesome. All right. How about crude oil? Oh, I'll tell you what, Mr. Stonks, crude oil. I will tell you straight up, I can't short it. Not on the daily anyways. And I can't right now in the hourly either. I can't short crude. Crude has broken the downtrend, gone neutral. Now it's picked up bullish momentum and it has green candles on the daily. I'm not allowed to. Once those candles go green, it takes shorts off the table for me. So I'm allowed to buy, but I'm not allowed to have a short sell yet. Now, if some weakness does start to build into crude, I'll probably see signs of it as a day trade first, and then eventually as a 1-hour short-term swing. That would probably be where it would start to organize. All right, gang, I got to go. I'm a little bit over. I will see you all tomorrow, same time, same station. Be good to each other. I'll talk with you soon.